Okay. Hello, friends. So, how are you guys? So, I'm Tina Gadodia, President Quantsapp, and today it was just like let's understand something how we use the data. So, we keep on seeing people asking what to use for intraday trading, how to use Quantsapp for your swing trading, positional trading में कौन से products use करने चाहिए. So this webinar is basically understanding how we use the data from various tools and then come up with some trading decision. Because in the end, we have to do either buy or sell, right? So now, how well we can understand the data and how well we can decode it to come up with a very good trading strategy, something which helps us to make money but at a low risk. Okay, so today's agenda is very clear. Something will be, there is no structured way of like, yeah, I will be going through these 4 products only. So it will be a mix of all the products which will help you to understand what to use when for the intraday trading as well as on the swing trading. So before we go that, I've just made one small differentiator. So one is for the intraday and secondly is for the swing. Okay. So when it comes to the intraday trading, the tools which can come handy to you could be Synopsis, the single charts, built up. So built up the script wise and the sector wise, FnO News, open interest, something where you have the custom time change, then option gain, specifically only and only on the weekly expiry days. So like every Thursday, you can say. Then the option triggers, stop and target, index contributor. Okay. So this in totality can help us find out like ki aaj kya karna chahiye. Okay. Now in the swing could be for 2-3 days or maybe a week's time, depending how you played. If you're playing through a single leg option, then it could be 2-3 days. If you're playing through a strategy, it could be for 5-6 days. So these are the products which helps us to refine, do a top-down approach. So you have a single chart, strategy start, then you have the built-up cycle. In built up, you have something called a cycle and the historical one. So that comes very handy when you're doing the swing trading, because there you need to be very clear about how is the direction moving on. Then you have the built up sector. Then you have chain what if, because options come with a protocol saying that I have time decay. That's something which you need to take it with a pinch of salt. You need to understand how I behave for a given time frame, how I behave if my volatility moves here and there. So chain what if becomes very important when you are carrying forward your option trading options. Then you have open interest. Then you have volume analysis. So this product we have only in the web version. Then you have IV. So you have the IV chart, which is basically the historical IV chart. Then India VIX. Trap indicator, it's one of the algorithms, so proprietary algorithm, which has a very good success rate, wherein like the stocks are come after a lot of checks in terms of trend, in terms of volatility, in terms of some derivative data. Then you have pair trading. So I would say relative performance also comes into this thing, gainer, loser, and price percentile. So let me quickly start. Okay, so how do we start our day? So we have 9:15 the market starts, the 3:30 it closes. So if you are an intraday trader, So I'm sure that you will be on your screens looking at every tick. You would be like, no, 20 ho gaye hai, now I need to start taking. I have to do something in the market. Yes, you need to do it, but first let the data speak out. So the way you start your day, the very important to know how the market picture is coming up, how it is going behaving. So whether maybe at 9:30, 9:45, so let the market settle down, understand how it's going to behave. Okay, so figure out how the market structure is. Is it more on the long side or more on the short side? So Synopsis gives you like a heat map. It tells you which sector is seeing the long, so not sector, sorry, which stocks are seeing long, short, long unwinding, short covering. So you have, assume this is like a 9:30 picture. Okay, you can see how the public sector stocks were moving, say ONGC, BHEL. Then we had the power stocks which have been continuously moving higher and higher, because you always have some backing on your data. So today if I take a trade which is backed by your data, my conviction increases. I don't get nervous because market has come down by 50 points. You have taken the stock based on the stocks data. Definitely the market comes into picture, but there is certain stocks which are showing that I am going to go higher, or like my price is going to correct. So you don't get nervous because of the small market movements. So that's why the data becomes very important. The OMC stocks were under the limelight. So the green means there's a long belt up where the price was going higher along with the OI up. So that means the fresh interest was seen in the stocks. Yellow is basically the price is going higher, but the OI is reducing. So it's basically called as a short covering. So when you see that a lot of shorts have been come into the system, or like the stocks have been a sideways, and there was accumulation on the short sides which was there, and the price suddenly gives you a breakout, then those short players tries to cover. So at times there could be a short covering drive which pulls the stock higher, like a Asian Paint. So Asian Paint have been in a series of shorts, and today it was just a short covering drive. So when you play a short covering, understand it very clearly. Short covering would be very fast, and it will be like a short lived, because when there's a fear, in fear people work with panic. They have certain panic thing coming up, and they want to do it very fast. You don't look at like the boss, let the price come to my level, that time I will cover it. Because when you're in a loss, you're always in a hurry to cut the losses. So that's very clear. So short covering, you see that there's a sudden spike in the prices. You see the OI which is going down, sudden spike in the prices. So the intraday trading perspective, I say, if you're playing on the short covering, it's good. If you're playing on the long, it's also fine. But when you're taking any positional trading, short covering, you need to be very, very active, unless until you see that there has been a huge short and there are a couple of data points which signals that now there could be a move of 4-5% coming up, then you go for a positional. Else, for an intraday, restrict like your short covering, whatever you have played, close your position by the end of the day. So that's how the short covering should be done. When you have a long belt up, the conviction is higher, because you know that the people have taken the have carried forward their position for the next day, because there is an embedded positivity is there in the stock. So say for instance OMC, for a couple of days they were moving higher. Then you have oil sector as a whole, since last 2 days they have been performing. Then metals selectively have been performing. Reality was like they were long, then they corrected, and again now they are finding out some buying opportunities. PSU bank as a whole packet, they were performing. So every day when you look at the market, you know that ye stock kal bhi aisa acha hi tha, and today you see that there is a carry forward momentum, then your conviction even increases. So 9:30, 9:45, Synopsis, a very simple tool. No rocket science. The only thing you need to look at is like green, long, red, short. If the market is more towards the short side, even though I have a very good conviction on the long side, I should maybe think twice before taking an action. And if your conviction on the long is quite good, then go about doing it. Otherwise, don't try to go opposite to the market. So give a sense like how the market is moving. Wow. So today was complete. Today was actually like a zero sum day, equal amounts of long, short coming up. So you had a long 38 stocks, 40 were on the short side, 28 on the short covering, and 35 on the long unwinding. So we see that we had a very good trend. The up move was super, and now the market is trying to stabilize. It's trying to digest those gains. Either there could be a pullback, which could be a decent one, or else it can consolidate. So there are many triggers which says that the market is in a consolidation move. So consolidation move doesn't mean that market band karke chale jao. At times, when it's a consolidation, it is more a stock specific move that comes up. You may not get an opportunity in index to trade, but you see a lot of sector rotation. You see a lot of individual stock performances. So those time the stocks comes into picture. So you need to have how the stocks have been moving. So if I say Synopsis will give you the first clue how the day is panning out, which stocks are coming out. Okay. Now you have here the chart signal. So you can directly open this in the charts and you can say that, okay, say today this was just 2%. Let's see how the chart is. If I go to say ONGC chart, it will start opening up. Okay, so this is a 5 minutes chart. And if you look here, it opened with a gap only, and then we saw consistently the OI was increasing. Okay, so there was a long build up in the futures consistently. If I look at the daily chart, so if I say daily chart, this was the level. It was price was here. It broke the last 2 days highs and it was started moving higher. Then we can say that if it has moved higher, what is the earlier swing high? So if the earlier swing high was 108, so a move about say 104 can lead to 108. We may not have thought of 113, 14, but at least 108. For an intraday trader, this is fine. Perfect. Now we saw that the OI also have seen a good breakout. So when I say OI has increased, that means a fresh perspective has come into the stock. The fresh traders have come into the stock. So people are taking the stock seriously. The OI is increasing. And when you see the price is going higher, so that means that the long build up is a serious build up. Okay. The places where you see the price is going higher, but the OI is not increasing, that means people are very hesitant to carry forward the positions. So which is something nervous thing. Maybe if you're getting an opportunity just by the price action, do it intraday and don't carry it forward. Okay. So you can have a look on Synopsis. Synopsis, look the stocks which is coming on the long side, short side, and then pick the stock, go into the chart and see how it has been the trend. Look at how the stock behaved yesterday. How was the OI trajectory? How is the OI moving today? Is the OI giving some sign of positivity in terms of breakout? In the price term, what is the nearest resistance level? If the resistance is very close, let it break out and then only let's take a trade. Otherwise, you know that what is the immediate hurdle which is coming up. Okay. So this way, the Synopsis to single chart for the intraday trading. Now, when you go to build up the script, you see here the symbol. Okay, so now you see here all the stocks. Somehow you see the everything, the Nifty, the Bank Nifty, everything at one go. You see how the price have been going, how the OI has been moving. So OMCs were there. So sort of like a Synopsis, the one step ahead, and you can figure out the stocks. You can look at the sectors. So if I say I do auto, how the auto has behaved today? The price were down, the OI was up, the price was relatively sideways, you can say, maybe a 1% or so. So after such a good run up, a price taking a breather, you can't term it as a negative sign, it's a breather. Okay, now we see that there was a sideways moves which were taking place. If we look at the banking stocks, so banking, the PSU bank continued to hold up. Then you had the private sector banks which were not performing today. So today it was more aligned, skewed towards couple of the PSU stocks. Otherwise, the banks as a whole saw the unwinding. Also, we need to understand that we need to understand how the expiries move. So like when you think about like the Thursdays are basically a hardcore expiry day. So you will see a lot of shuffling taking place during the day. The first half will behave in some different manner. The second half will be a completely different picture because there is a lot of change of hands which takes place in the options OI. So you cannot be sticky and say that कि हाँ ये आज का view बन चुका है खत्म बस, it will be that way only. So when you're an intraday trader, you need to have a sense of data at every interval and you need to respect it. So when the data is shifting, you need to shift it also. Okay, so if you start seeing that suddenly the particular sector is going on the long side or particular sector is going on the short side, just putting a pressure on the Nifty, Bank Nifty, then it's better not to stick to it. Then you have, say we saw how metals, so metals were long. So basically we saw a positive price movement across. So yesterday also the metals were good. Today also it continued it. So overall metals were performing. Then you have oil. So today it was a oil which were there on the limelight. So be it the OMCs, how it behaved. So apart from, I guess, so Reliance was sideways. Rest everything was proper in terms of on the long side. So it was today a day which was completely skewed on positive side by the OI, by the oil. So this way you look at the how the futures are giving you the indications. Now, if you click here, you see there are multiple products which you can open. So there are few products we feel that those are interlinked to each other. So if I have to understand, I will always look at built up futures and option data always together. It will never be, I will just look at the option data and just take a trade, or will take a trade just based on the futures data. Because in a derivative, futures and option have to go together. So both the data together and comprehensively, what signal it gives makes sense. So you saw this. Now let's see if I have to open the open interest. So this was the open interest of, say, Gale. Now I love this chart because this is one chart which gives you the clear-cut picture how the options have been, where which strike saw the addition, which strike saw the deletion, how the call behaved, how the put behaved, everything come under one nutshell part of it, you see it. So if I have to ignore it, say let's assume that morning time we have 140 call and then we have directly 150 call in Gale. So if the moment we start seeing that the price is moving above the highest call and we see a reduction which is taking place in this strike, that shows that now the nervousness will come up and this will take the prices higher because there is a risk. But here also is very important, like will the journey be one through after 140 सीधा 200 पे आएगा? No, it will never be that way. There's always be a multiple hurdles coming up, multiple support coming up. But when you're trading an option, you don't need 20% move to make a big money in options, right? Even your 3-4% move can give you a decent money. So it's very important that you act fast both sides in the entry time as well as on the exit time. So even like a 3-4% move is decent enough to make you money in the option of say 20%, 25% move thing. So that's how we have to look out. When you start seeing that though the prices is going crossing the highest call, but we don't see any unwinding happening. Matlab, let the price do its work. I'm the call writer. I'm confident it will come back. There won't be anything outstanding which is taking up. It will come back. So that shows the confidence in the writers. So open interest, when you're reading, it's just not that ki kitna add hua, kitna subtract hua. It's just the shifting. You need to understand the sentiments that goes behind it. Where is the nervousness or where is the confidence? Who is getting the confidence? So if I say in the money puts are getting the confidence, so it's a positive sign. Why will someone go and write an in the money put or in the money call? So they will write in the money put only when they feel it's quite strong. They will write in the money call only when they feel that the market is weak or the underlying is weak. So understand how the action is taking place across the strike. If the action is restricted only to one strike, avoid it. There has to be action across it, because a particular strike pick, if only one particular strike is dominating, that means it's just few players which are there. It is not what the entire market is weighing. So, and we are not interested with few people acting. We are interested in how the entire market is looking forward, because that will help us to remove the trades which are low risk, which are high risk. Sorry. So we need to figure out the high conviction stocks. I have 10 stocks. I want to take a trade only in one. I don't have unlimited capital, correct? So we need to boil down to like which is my high conviction trade for the day. So this way you can filter out the stocks which are the high conviction one and the low conviction one. One thing also in an intraday trading which you should not miss out is the intraday change in OI. Specifically when you are doing the Nifty and Bank Nifty. So if I say Nifty, so things would be very different during the day also. Okay, so we need to understand how the things would have happened intraday basis. So suddenly if you see that the market was at high and suddenly it dropped, something weird has happened after a point. So understand how the things changed from that point. So if I say 18th, 12 p.m., we see that the action was more on now 15,150 call writers were there. The earlier, all the strikes we saw huge amount of shedding taking place, and then it shifted lower. And the put writers also were unwinding. So this shows that there is something tricky. There is something nervousness which is going on, which is not ideal for a good expiry. Okay, so you need to be there with the data all the time. Now, same thing if we look at the monthly expiry, how it behaved. So if you look monthly expiry, so you have 14,000, 16,000 huge OI. Okay, so you have nearly 40 lakh shares. In between, you see there are multiple hurdles live. So it's not something one straight line. It won't be so this expiry won't be like a one straight through. There would be ups and down, there would be swing. So wherever there are swings, so it cannot be one-sided down or one-sided up. So when you're getting lower, buy on dips. When it's coming on the higher, sell on rise. So it's a range-bound market. So reading the data itself is very important. So open interest as a tool, it's used both for the swing trading as well as for the intraday trading. So you cannot avoid not looking at it. I would rather say it is compulsory if you're a trader. So that's what the importance of this data. Now everybody reads the open interest. So what is important is to read the entire strike. Look how the data is panning out. Look how the range are moving. So range, such a big range on both the side indicates that it would be a swing. It won't be a single one-sided thing. So market has already run up decently, almost 8-9% this expiry. So now it is digesting. And it's very important for being into the healthy market. Some sort of pullbacks are very much essential. But we see that 15,000 put The next series is giving a decent support. So it's not something could be ignored. Okay, so it's giving a decent support. So even if you see that the prices are coming lower, but we don't see that the conviction of the writers running away in all the expiries. So when you're looking at the Nifty, Bank Nifty, have a look always on the monthly expiries also. There could be a possibility like today being a weekly expiry, my weekly data points would have crossed it. So it could be an intraday. Because the market has dipped, I sell out my entire portfolio. It's not wise. So to take a decision that is it a short-lived thing or is it like a conviction based selling taking place, look at both the weekly data as well as the monthly data. I won't say the next weekly data, I would say a monthly data, because monthly there are still serious players playing out only in the monthly expiry, they are not doing in the weekly expiry. So take the clue from both the expiries. Okay, so open interest as a tool is the most important thing when it comes to the options trading. Okay, now you can look at the charts of the individual stocks also, stocks options also, Nifty options. So say for instance, if I look at Nifty 18 Feb 21, I look at 15,200 P. So that was the highest put of Nifty weekly expiry yesterday. So 15,200 and 15,300 was the range yesterday. Now, so you had a OI of almost 62 lakhs. So if we have to see this, one sec. Okay. So if you look here, we started wherein like a Nifty went above 250 levels. So 15,250 was somewhere in around that point. We saw that 15,200 puts was still seeing the writing. So till 10:45:50, we saw the OI moved up to nearly 61 lakhs. Then we start seeing suddenly the prices are correct, moving higher. The put prices are moving higher and the OI is shedding. This is the weekly expiry. This is the pivot strike, and activity on the pivot strike shows that the writers are hesitating, are moving down. It's first sign like the trend is not good. It's a time to reconsider your longs for the intraday basis. Okay. Now, once you see the short covering move and then the rest becomes the history, then you have to always look at the money data. It's not that you have to always look. If I started with 15,200 put for the entire day, I look only at that strike. It's always what is the at the money moving out that point. So if we start seeing that from 15,250, it breached 15,200, went to 150, you have to shift your strikes. You have to see how the entire chain is moving. You now during the same period, how did my call behave? So if I do 15,200, so 15,200 was seeing the, continuously writing. So gradually we saw there was a good OI, and throughout the day there was an addition which was taking place. So data was something like a call writers were there, put writers were not acting till 10:30, 10:50 time. After that we saw the suddenly the put writers saw the panic thing and the market moved out. So it went down drastically. We saw it breaching to coming to nearly 15,050 levels and then again moving higher. So expiry day volatility, you have to take it, and you have to make sure that you look at the intraday moves. You cannot afford to just look at one particular time frame and take your entire decision. But one thing is also important, that based on the expiry day, you can't take the judgment for the entire expiry. So Thursdays would be a high volatile day. You will see a lot of swings taking place. But when you are taking decision, like should I carry forward my short to Friday? Should I carry forward my long to Friday? Always look at how the monthly is behaving. is monthly at the crucial level and the monthly is also giving a sign of panic, then definitely this is a short trade. If monthly is not giving a sign of panic, then whatever short you created, book it out intraday and move out. It's not necessary you carry forward your positions every time. So keep the futures built up, keep the options built up, keep the charts handy. Now in charts, one more thing comes is like I prefer to look at the Greeks chart also. So if I see, this was the Greek chart. Okay. So this was the point when my Greek started giving a breakdown. So it was the time, say 15,200 was nearly at the money. The point here, it gave a breakdown. For, it was started moving. So it was, the market was, crashing and the option was becoming more and more out of the money. So this is the point, shows that now this option has a low chances of coming back to in the money. Then this gives a breakdown. It shows that now it's a writing market. The call writers are getting aggressively. Similarly, if we do your put option, so if you look here, put option, so put option delta is 0 to -1, when -1 means in the money put, 0 means out of the money put. Okay. So the option which is out of the money call is in the money put, and option which is in the money call is out of the money put. So this is the thumb rule of options, and always you have to be in sync with the moneyness of the option. So if I see here, the graph here again tilts down, but here if you look at the axis, it is negative axis. So when I say the put graph is giving a breakdown, so that means the option is becoming more and more in the money. So from minus 0.5, it is moving to -1. That means it is becoming more and more in the money. So if you look here, you saw that there is a breakdown. So options OI is also correcting. There's a breakdown. The delta is also, crashing down. We are seeing the prices are going higher. So this is a good chance of like a trade wherein like you can see a decent money coming up. So from here, you saw that from 45, it came to around 120 levels. So we don't need to catch up the entire rally. We are trying to make in an intraday this fast money, right? So option giving you 40-50% move immediately is a decent money to be captured in. Okay. Always just not stick to one strike. So my recommendation will always be have an eye on 2-3 strikes at the money, the most important, as the option shift. So you have to have 1-2 strikes up and down, the holistic view, because that will give you the entire map of the market. If you start using this on a day-to-day basis, so for your intraday trading, you will see the difference what it gives. So now let's look at, say, IOC. So future, there's no delta. So you will see NA, there's no price thing. So the movement we saw today, that as it was going, so we saw that the price was going higher with the OI consistently. So that shows that the move is a strong move and the players are taking it seriously. It's not just like a very common one. When you start seeing the OI built up in the futures segment, it's a good move. And if we look at Asian Paint, so if you look here, so Asian Paint starting thing, it was basically covering, so 24.20, and then the entire day the OI was sideways to going higher. So between year, from year to year, you see that the OI is basically minorly going higher. So it was not a gungo short covering. So though it was like a minor, we saw a dip in short, and then we saw the price of the OI also catching up again. Now in charts, if you want to look at any particular expiry, you can also look at the particular expiry. So if I say I don't want to look at the complete OI, I just want to look for the particular expiry, you can select the expiry and have a view only for that expiry. But preference would be looking at the combined data, because during the expiry week, you'll see a lot of rollovers taking place. From this current expiry, it is moving to the next expiry and so on. So you see a lot of, rollovers taking place. So always look at the combined data. Okay. Now, one thing, chain. Okay. So basically what does the chain does? So chain is basically the snapshot view of the entire option chain, the option thing. So you see across the strike how the premiums are behaving, the IBs are behaving, the Greeks are behaving, call side, put side, those, and you take the decision, right? Now, it's very important when you're taking a trade. So if I have taken a trade at say 9:30 and I want to look at what would be the price at 12:30, I want to exit it, say there is some policies coming up or something, I just want to exit it intraday only. You can look at what if and figure out what could be the price of an option at particular time. Okay. So assume I want to take Nifty 25th Feb, next expiry, say date. If I say by 19th, sorry, by 12 p.m., what would be the price of the option if the market was around the same level? So now you have one full day part of it coming. So you see that the theta is coming into picture. But it's the same thing exercise you do at 9:30 and look at after 2.5 hours, how will the option behave? What if my Nifty from 15,116 moves to 15,170? So my 15,100 call will be up 25 and puts would be down by almost 28. So this way you can have a clue of like a intraday basis how my option premium will behave. And as an option trader, you're always looking at what is the gain I'm looking out for. How much, if you're a say technical trader, you have a good sense on like what would be the underlying. This breakout can materialize and it can go up by 5 rupees. Now, when you're taking an option, say at the start of the expiry, that 5 rupees could have made you say 3 rupees in the option. But today, when you're closer to the expiry, the same 5 rupees will not make you 3 rupees. It will make you say 1 rupee 75 paisa. So you need to understand today when I'm taking a trade, how much will my option premium behave? Because it's very dynamic and it will change depending upon your where are you in the expiry, where are you in the volatility. Say earlier my volatility was very high, so that 5 rupees would have made me say 3.5 rupees also. But today, over the period of 10 days, the volatility has come down by 20%. It is not going to be the same 5 rupees giving you 3.5 rupees. The 5 rupees will give you 2.5 rupees. So it's very important when you're taking a trade and when you're trying to see that I expect the future Nifty to go up by 60 points from here. What is the option premium going to go? So this will help you to look at the intraday prices also. The option chain comes handy when you're doing a swing trading also, because in a swing trading, what we expect to see how the price behave. Should I carry forward or no? So I expect the underlying. So if I say I expect Nifty to go by Monday, say, so instead of time, I do say day. I exactly don't know how much time it will take for Nifty, but say after 4 days, I expect Nifty to move back to 15,300. So don't go by this my numbers. So these are just the examples. These are not my view per se. So this is just the analogy which we are taking. Say 15,300. Now my 15,100 call will be up by approx 75 points. So this gives you perspective of carrying forward your options. So if I say I do a bull call spread, I can look here and I can look at the chain and what if and can see both the strikes I do the MTM part. So 15100 as was with 15100 buy, 15200 sell, 15100 making 5600, 15200. As I have sold this option, it will lose out 3600 rupees. Net 5600 plus 3600 minus your 2000 plus. So you can use the MTM checkbox and you can figure out like what could be my ideal bull cost per doing it. So if I do say synthetic futures, so nowadays a different concept moves on. You see that futures, they may not be much of the long addition or thing or maybe a sideways, but in the option you see a lot of activity. Why? Because nowadays there are many players which are trading in the option market, or there are many players around. So they don't want to give the clue to the market all of a sudden. So the way you hedge it out is like you start taking the opposite legs in the option market gradually as you move on, and then you unwind your futures. So there are different combination wherein the option comes into picture. You can do a synthetic future, you can do a long combo wherein like you can bifurcate your strikes. I go in with buying a 15,200 call, selling a 15,100 put, depending upon my premium, what risk I'm ready to take it. Okay, so options you can customize it. The only trick you should know is the what goes beneath it. So how the maths work for the option. So there are different ways you can come out of a strategy very easily. So option chain what if comes handy even if when you're doing an intraday trading as well as the swing trading. Because when you're doing a swing trading, I assume it is for max 2-3 days. You want to be in the momentum, right? Strategy, if you're doing, then go with the architect, go with the strategy chart, do the complete analysis part of it. In a swing trading, you can have a look via chain what if also. Now, Greeks becomes very, very important. So you know that if my 15,300, the 15,100 option will become in the money, deep in the money, 0.8, 15,200 option will also start becoming in the money. Okay. So as it starts moving in the money, my, you can say the positive, the PNL will start increasing. Now, if I say the same 4 days, instead of 4, I do 5 days. Now my PNL will increase further. So 15,100 would be up 64, 15,200 is up 33. We are making 30 points. Okay. So this way you can have a knack of like how IV change. So if I say the IV drops by 30%, the things would be different. So have a sensitivity analysis with the underlying, have a sensitivity analysis with the volatility also. If the volatility is especially very high, so when the volatility is very high, take a sensitivity like what if the volatility goes down. This is very important when you're doing for the stock options, not in respect to the indices, but definitely in terms of stocks, because stocks where the volatilities are varying a lot, especially during the result season, where you see that I'm buying say Infosys, or I'm buying say TCS option before the result, and the way it behaves after the results are completely different. Okay. Now, FnO Scanner or the FnO News. So let me first make you understand the either or. So FnO Scanner is basically, you're scanning the entire market, the entire options as per your data points. So if I say at 10 o'clock, I come to the market, chalo, I've seen the synopsis, I've seen the build up, I come to know the breadth is like on a positive side. There are few stocks which has already run up. Now I want to figure out like which option to buy, which stock to buy, where the momentum is picking up. So I come and do say, tell me for the options, I want all, only call, only put. So let's do only call. Expiry say I want to do 25th Feb. Okay. I want to see the price which has gone up. I say now we are doing post market. So definitely the changes would be very high. But say when you're doing at 10 o'clock, or say you say the price which has gone up by say 25%, and OI which has gone down by say not minus 20, say minus 5%. So you're just trying to figure out where the momentum just picked up. IV may or may not. So say I remove it and put apply. So I see the options, I see the strike, expiry, everything. So since there has been a good moves here and there everywhere, so we see there is a lot of activity. Now I can make it from 25 to 100 also, but the idea is to do FnO scanner, maybe you do at around 9:45 or around those levels to figure out where the activity is taking place in the options. You have full liberty to look at, say, instead of positive price change, I say negative price change if I'm a writer. If I say, tell me the premium where the prices are down by, say, 20%, and OI is up by, say, 10%. So different list will come together. So you have Glenmark, you got Ambuja Cement Short, Canada Bank was there. So it was, the things were different morning and evening. So you look at this scanner maybe at 9:45 to pick up the early trades. Once you do, if you get your around 30-35% return intraday, exit. If you are doing a swing trading, see what is your other data points telling you. Where is the OI structure? Where is the built up? Is the built up? You see a lot of long accumulation, then there could be much more bigger trigger. Is there a breakout coming up? There could be a much more trigger coming up. So this way you start seeing the market. Okay. So FnO scanner comes handy when you want to do your customization. Okay. Customization in terms of tell me which are the options where the prices were up by 100% today. So I do just 100% is irrespective of OI change. So Torrent Power, Bank of Baroda, Gale, then HPCL were the few options. You have long, short covering, you can see here. Then, right? Then you have FnO News, which are basically, we have scanned the market. There are certain logics which we have put it, and based on that logics, we start getting the strikes. So you can say we have filtered out that work for you in terms of like you don't have to do customization. This is something what we feel that the proprietary algorithms are there which scans the market, which say that where there is a lot of momentum capturing. So those things. So you can use FnO News as well as the FnO Scanner in the early morning trades and pick up the high conviction trades. Now, if we go, so one thing from the expiry perspective, so if I have to understand from the expiry, one thing I look a lot. So option gain. So basically, this is the product which should be used only for the intraday trading and which should be used only on the expiry day. Okay. There are EQ level is something we can use it during the expiry also. So I will explain you that. But if I have to think properly only from the gain level, then this is the product wherein like I'm not going to take a trade just like where is the gain level and this is what the Nifty is going to do. Because this level changes very fast. Because during the expiry, you see a lot of shifts which takes place in the options OI and that too very fast. In morning, you will see there are a lot of call writers. Suddenly, the second half picture is like there are call writers have vanished and it is a put writers. So now how we trade is like look at the gain level and see is there a shifting taking place or no. So a morning was there at 15,200. It is coming down to 15,100. So that shows that the participants are very hesitant or like they are not having the high conviction. Second way to look out is like a market has given a good swing, but the gain level is not shifting. So it means that whatever said and done, everything done, in the end, the expiry should be in the vicinity because the writers who are there with these levels are pretty strong. Here they are headstrong, so they are not going to leave the expiry so fast. So even though there is a drop in a key level, there will be bounce back coming up. So this is one thing we should look at. So the gain level, look at from the shift perspective. Upward shift, that means it's a trending upward market. Downward shift, that means it's a trending downward market. And if you see that though the price swing is high, but the gain level remains where it is, that shows that everything said and done, it would be a doji day, where it would be a writer's day. You will see that they are making the max amount of money here. Okay, so that's how we can decipher the gain level. Use only for Nifty, Bank Nifty, that works beautifully. Stocks, it's not the, you can't see a lot of volumes across the strikes. So basically this algorithm requires you need to have a strike good amount of quantum participation on all the strikes. So that happens only in Nifty, Bank Nifty as of now. So prefer to look at only that. Now, how you use the EQ level. So basically EQ level is the point where neither the call writers nor the put writers are making money. Okay, it's like a indecisive point of time. So earlier we had the EQ level yesterday at the lower end. As we breach that point, so now the shift has taken place higher. So if I have to consider, the bullishness in the Nifty will start only if it now again goes above 15,220. Okay, this is the point where beyond this the call writers will start feeling that nervousness, that heat will come up. Okay, so the moment you see that the price again moving about 220, cut down your shorts, you can go on to the long side. The reverse would be, say EQ level is at the lower end, now the prices are breaching that EQ level on downward side, the put writers would be in the trouble. So that's how basically the EQ level works out. So good tool when you're doing the weekly expiry, Nifty, Bank Nifty, intraday, इस पे कोई swing trading नहीं करना. Okay. Now, for the intraday thing, I also can say stop and target. So I know too many products at times becomes difficult to look. So use the search one to get your tools. So you have the stop and target. Now, so basically, we need to respect the option data, right? So based on the option volatility, based on the option data, these are the levels which have come up. So it tells you what is the conservative upper level, moderate level, and aggressive level. Similarly, the conservative lower level, moderate level, and the aggressive level. So this data tells you like which is the key pivot, support, and the resistance. So now if you look at the Nifty, 15,040 is the key support level. Upper end 15,373. So now the band between the Nifty is like nearly 15,000, 15,400. This is the band which the Nifty is moving on to. If it breaches this 15,040, the next support comes to 14,950. So we know that where could the dip take place if this level is breached. Similarly, on the upper side, if 15,370 is breached, the next support is next resistance is 450. So ideally, you see that most of the time it's the conservative levels that plays out the max thing. But when there is a super trended day, you will not be surprised to see that the levels, all three levels are breached. So if you have a trended one-sided day, you can see that the aggressive levels also get breached. So it's like that's how we play for the pivot, R1, R2, R3, S1, S2, S3. The same concept lies, but here you are taking a trade based on the derivative levels. It's not the technical levels, it's the derivative levels. So based on the entire options data, IV, you have these levels, these bands coming up. So volatility based level. So 15,040, Nifty lower end, then 15,373. So how you use it when you're doing the intraday trading, you see that the market has approached towards certain key levels. You can partially book your profit. You can then look at how the market behaves at that level. Go and watch at the option OI thing. Is the you see the nervousness or no? You see that there is nothing sort of that. Then you can play a contra trade with a low risk. Nothing comes free. So basically you have a low risk. So in the end, what we are trying to figure out is to find a high conviction trade where your reward to risk is considerably good. So that's the entire agenda with which we come to the market, right? We are not saying the risk will be zero, but we are trying to figure out, like, with the low risk, how I can maximize my return. Now, if you look at the bank nifty, the lower band is 36,377 and the upper level is 37,600. So bank nifty 1,000 points is very, very easily done nowadays. So it's nearly like 3% move, and that's what the bank nifty volatility itself is. Right? So stop and target, I have seen it works very good, especially intraday support resistance. You see many times these levels have become like a Lakshman Rekha. So you won't see that market comes this level and rebounds. So every day you can keep like today, which are my favorite stocks. These are my stocks. These are the lower levels. These are the upper levels. If it comes near the lower level, okay. Now let's, if I'm a short, then I can book here, wait for the confirmation, then we can go long. So you need to be there in the market. You need to understand how the swings are taking place. So market, if this is a sideways thing, so buy the dips, sell the highs. So that's how it should work. So stop and target, you can use it for the intraday basis. Then volume analysis is something. So basically this is product which we have in the web version. Ideally, it's more suited for the swing to positional trading. Okay. And it has a very good, track thing in terms of like you can actually come up and see if the very key levels are removed. You can build up a strategy on it. Like you do a positional bull call spread, you do some sort of like a positional butterfly sort of thing we can do. So now if you look at from last 3 months, we see that the Nifty, the key level is around 14,000. See, so if you look at the pin, 14,573, 14,600 is the key pivot point. Okay, we saw multiple times the prices going there. It retraced back, it came back to around 13,600 also before finally giving up. So now, when say if the market continues to correct, what is the key level as per the data? So it is 14,600. Okay. Now, if I say I want to look at the data since say 1st July, we saw the good run up. So the decent volumes were not there in, so it's an equal distance, you can say. So you have a multiple point coming up. So the far most point was how this behaved. You're near the 11,000 vicinity, 11,300 vicinity. And post that, we see there was an equal distance. So one-sided rally we had seen. So if you look at now the 14,600, which we saw in the last 3 months, that becomes the key support point when for any positional part. Now, if I have to do Bank Nifty, okay. So now if I do Bank Nifty, so you have from July, we see that the important support point is 30,500, okay, which is quite far off. And if we say from November, sorry, you have 36,000. So as an important support. So if it reaches this 36,000, the next level is directly 32,400. So Bank Nifty is at a very, crucial point. So your supports are very close by. So if it holds that thing, then it's good. But anything going beyond 36,000 can see the picture turning quite, it won't be as rosy as it seems to be. So there could be a lot of nervousness coming up. So 36,000 plays a 36,160 plays a crucial level in the Bank Nifty. So volume analysis is a tool which you can do it for the stocks as well as for the futures, and it helps you to take a very good decision. So at times you see that when the key levels are removed, it just moves out. So if we see the Reliance. So look, Reliance last 3 months has been just into the gyration, but we don't see much of the fall. It comes back and retraces and moves in a different thing. So now if you look from the perspective of data, 2000 is a support point, and there is a lot of volume which has taken place in this area. So now that's the reason we see that the Reliance is not going down also, because there's a cluster of volume which is taking place at the 1900 levels. So we don't see much of the panic taking place also. Now, if I have to look here, longer time frame. So now look here, for the longer time frame also, now this 2030, this area is a key point. So if this area is not removed, so if you look here, this entire zone of 1800 to 2200, we have seen a very good volume taking place. So the moment it goes beyond this level, you will see a massive, convincing rally coming up, or unless until it doesn't breaches 1800, we won't see a convincing selling also. So this type of data you should always keep a back of mind, because when you have a crucial levels breaching out, then you get a very good trade. So you get a very good directional trade. So you can use it for your swing trading, positional trading, intraday trading, everywhere. The same, let's see for some. This was SBI. So SBI 189. So gone are the days. Maybe like I guess so everyone would be repenting, saying that कि 200 पे SBI ले लेना चाहिए था, right? Okay. So if you look here, so even this level, so from November onwards also 218, at many times it has come near this level. So you see that whenever it has gone higher, the key level becomes the support point. It does come down, but it doesn't stay there for long, and again it moves higher. And once it moves up again, then it has got a lot of power, and then the direction move starts up. So volume analysis is something very good to do your swing and the positional trading, but as a habit, keep a scanning every day. So you know that you keep your trading journal, make out the points. Okay, based on this, like a few stocks which are looking good in multiple products, this can give you a high conviction trade. So this conviction trade could be ranging where the underlying could be 15-20% also. So you have to plan your trades, you have to plan your entire strategy, how much portion you will allocate to your intraday trading, how much portion you will allocate to your swing trading. So there is a product which helps you to look out for your swing trading. There is a product which helps you look out for your intraday trading also. And I simply say that the volume analysis works beautifully when it comes to your swing trading and positional trading. Used for the stocks also, it has given a beautiful result. It has been very wow, you can say. Okay, so you have this volume analysis. Now, people also look at the pair trading. So pair trading comes from the positional perspective. So we have seen a lot of products from the intraday swings, intraday trading. Now, let's discuss something on the positional side also. So it's not necessary I do the long short thing, those. I'm saying from the basic to intermediate level, there would have advanced things which comes up on the pair trading. So which we can discuss in length in some of the workshops of those part. But whenever you are doing some cycle like a normal trading or say relative strength thing, look at this data. So if I have to look at Nifty, Bank Nifty, okay. So if you look from here, from February 20th onwards, we saw that the Nifty, the ratio was going higher. So you have the first symbol as Nifty, the second symbol as Bank Nifty. So you have the Nifty going up, the Nifty outperforming the Bank Nifty. So Bank Nifty was underperforming. So we saw how the Nifty gave a very good return and the Bank Nifty was not able to remove even the previous high. This was clear cut. So we saw that the ratio was giving a breakout and it was the Nifty outperforming the Bank Nifty. Now, after September, so we saw that the ratio from 0.52 today it has moved down to nearly 0.41. So it shows that Nifty, Bank Nifty is outperforming Nifty, or the Nifty is underperforming Bank Nifty. So understand the word outperforming and underperforming. So when I say outperforming, that means the return which Nifty gave was higher than the Nifty with return which Bank Nifty gave. It's not positive return or the negative return. It is the outperformance, the alpha. What do you say? And when you say the ratio coming down, so it was that the second symbol, that is Bank Nifty is now outperforming Nifty. So if say Bank Nifty has given 20% return, Nifty gave 10% return. This is how. Now this ratio is at this very crucial, you can say the earlier breakout level was 0.4041. So this is the point where you can see again the Nifty could outperform the Bank Nifty. There could be the sectors apart from the banking sector which can take the upper hand. So this way you can have like, I cannot be completely dependent on the banking stocks. When the market moves, it's move in holistic way. It's just not one sector outperforming the other. So it moves in a holistic way. So there could be a lot of sector rotation taking place. So that's why we keep on saying that keep an eye on how the sectors are performing. Keep an eye on how the relative performance can be seen. You can then do with any other symbol also. So if I have to do, so this was like a Nifty to Reliance. So we saw how till September it was Reliance which was dominating part of it, and after September the Reliance became a sideways and the Nifty was continuing its going upward thing. Now this ratio moved from 5.21 to 7.64, the blue line. Okay, now if you look here, the earlier breakdown level was same. So now it is finding a resistance out here. So if it breaches this 7 level and comes down, so again we can see the Reliance outperforming Nifty. So this is a crucial point for the ratio of Nifty to Reliance. Okay. Same way if you look at say Nifty to HDFC Bank. It's a range bound thing. So nothing concrete way. So it's a sideways moves part. You can use correlation. You can use Z-score. So there are many studies which can come up using the pair trading. Also, one thing importantly, we can look out both during the intraday as well as the swing trading is the index contribution. So when you look at the market, you see in first half an hour how the Nifty is moving, how the Bank Nifty is moving, which stocks are helping the Nifty to move up. So if I say it's only 1 and 2 stocks which are driving the entire move of gain, then don't take a trade for that day. Because it's just like 1 and 2 stocks, rest of the market picture is completely different. Nifty is showing green, but you can say that the major stocks are negative, then the things can take a U-turn. Secondly, if you see that when the frontliners are not contributing that much, when you see that the sidelines or the less weighted stocks are contributing a lot and the frontliners are not contributing, so that itself gives a signal that key it's just index management. It is not something which is a broader participation. Again, then we should avoid it. So index contribution, this doesn't mean that kitna कौन contribute कर रहा है वो पढ़ लो. You need to also understand how the contribution is varying. So is it like it's completely on the green side, completely on the red side? Is it a mix? If there's a mix, then which are the sectors which are performing and which are the sectors which are not performing? So if you look at the today's market, though Nifty is down almost 100 points, so you have today Infosys, ONGC, then oil was there. Then on the downside, we saw, so finance stocks were quite negative. So HDFC Bank, SDFC, ICICI Bank, Kotak, L&T. So the strength of the bears were more than the strength of the bulls, you can say. Sector wise, this again can give you a clue like how the market is. So it was private bank which contributed on the negative side 69 points. Then you have the NBFC contributing negative side 28. So till now, till yesterday, it was the banking and NBFC which were driving the show. And today it was completely opposite. So who took the charge? It was IT, it was power. So these two stocks sector took the charge. So this way you can look at the index contribution for the day, how the things are moving out. If you see that there is all the sectors are performing positively, then you can go and filter out the best stocks among that and see how the things could be better, which stocks are giving the breakout, where there is options, you see a short covering coming up there, you see a range shifting taking place, those things comes into picture. Now contribution you can also look at from any particular day. So if I have to say the entire February expiry, so say from 29th Jan, so you have Nifty performing 9%, okay, out of which private banks contributed 483 points. Then you have oil 224, NBFC 180, PSU 114. The only draggers were FMCG, which was clear cut from like the heavyweights like lever not performing. Then you had power which was performing. So you can see that certain sectors which has always been laggard has now started moving higher, like a PSU banks were not contributing so much during the Jan series, but it is contributing in the Feb series. And then you can see that those pocket when they don't move for 5-6%. अगर अपनी छाप छोड़नी है, so they have to move considerably. With 2-3% move, that move is not seen only in this stock. So if they participate, they will participate with 20-30% move. Getting it? So power and power, PSU banks, those started performing. So for a swing trading, positional trading, you can frame up your mind and see that how the things have been for a considerable days. So for 4-5 days, say for 15-20 days for the entire expiry, how the things have been. Similar to index contributor, now you can also look at the gainer loser. So if I look at the gainer loser for the week, Bank Nifty is up 1.3%, Nifty is nearly flat. The stocks which performs were like a PSU bank, power, then you have oil. So PSU bank, power, so those were the contributor. On the negative side, you had the Idea, Voltas, Nestle. FMCG stocks were laggards. So this was clearly seen from the entire week perspective. We saw the FMCG were completely on the side track, or they were actually seeing the correction taking place. Pharma was also subdued. So pharma did not perform that much. So you can come up with your weekly analysis. You can pick the stocks on Friday. You can see how the things have been, the price move. Then you can go and see the historically how they are performing. So if I say Bank Nifty, I click on Bank Nifty and start seeing the future OIH. So we have right now, you can move in between the products. You click on the symbol, you can be taken to the other products which are closely related to each other. So say Bank of Baroda, there was a slight short which was there, and then the entire short covering which has taken place. And you see how the OI has been moving higher. one thing, whenever you are doing a trade, say positional trade or thing part of it, always spend 5-10 minutes on this product. So the future OIH, scan the entire market. So if I have to just go next previous and see how the structure has been. If you're seeing more of the greens, more of the blues, more of the red, how the things have been. So Bank Nifty so far has been on the long side. The last few days we saw some sort of unwinding taking place. Today the short was there, but the short is not that aggressive. So I won't say it is a trend change. Definitely people who have picked up at 37,500, 36,500, 1,000 point move. So the swing trading works good. Say Bata India. So we were seeing that there was a short which was taking place. Now it has come to the earlier support level. So this level of say 1,500 have been a crucial support for this stock for last 3 months. Now only if it breaches this 1,500, then the panic can continue, else we can see a rebound. BEL, how it was sideways, we did not see much of the OI part. So if you look at the absolute OI thing, so hardly any moves were there. Bojo paint, not much on the OI. So if you look, the color is telling you how the color depends upon the price action. But what is very important to look at the absolute OI. Was there any substantial OI which needs to be taken into consideration? So if I look at this is a substantial OI, but you don't see much happening over here. So spend some time. So Bharti, so there is a lot of gungo around the Bharti. Bharti is like it's near the 600 levels, definitely. So crucial point it is. So it's like a make or break for this stock. But if you look here, there was a good shot in last, say, early part of February. So in this range of 611 to 580, there was a good point part. After that, from last 5th February, we can see that the price have been literally being in the 585 to 600 closing wise. We are seeing that the OI has shedded. So if you look at the some historical data, now the OI is nearly like almost at the lowest point. If I have to see from say mid of August, okay, from here onwards the OI. So for a fresh move to begin, we have to keep a watch on what will be the next signal. Will it be a long? Will it be a short? And consistency is very important. So if we see that there is the options 600 calls are not moving out, the futures are not the OIH is not giving the signal, we cannot take an aggressive trade. But moment we start seeing that the fresh longs are getting built up or the fresh shorts are getting built up, then we can take the next course of action. Bhel, so literally you can actually visualize and see that the difference between the two charts. It was coming down, it was unwinding, and now again the longs are beginning. Okay, it was coming to a crucial support again. Then you see the the positive thing, the positive signs. So more of green and blue, sign of strength. More of red, that means that there's a lot of weakness. So spend 10 minutes on this product peacefully. You can definitely come down to the top 5 stocks which you have to look out for the next day, and the floor is yours. That's how you want to look at the data, and the data will speak to you. It's like you don't need anyone to tell you कि कल ये देखना बहुत अच्छा लग रहा है. So you will be in a position to tell your friends and say that कि boss मैंने study किया है, I've looked at the data and the data is saying this. I am not saying anything. It's the data which is saying that. And you yourself will be able to refine your studies. You will be able to refine your stock picking ideas and those things. Picking the 5 high conviction stocks, seeing them going 5 to 10% making money, sticking to it, making us some good strategies, making out the money is better than doing 15 stocks wherein you have to move out, in and out, in and out. You end up doing nothing. So pick up the high conviction stocks and stay with it. So my advice, please have a look on this product daily basis, 10 minutes, you will see the change in your entire study. Now, the same thing, you can say, not same. Now you have one product called as a price percentile. So it helps you to now scan the stocks wherein you see both price and OI action. Okay. Now, where are we looking out for? So if I'm looking out from the long side, so I need to look at the stocks where there is a good price and OI action. So when we talk about the percentile, so percentile means number of days where the value has been below the current value. So if I say price percentile of 99.44, which is nearly 100, so you see that 99% time the price, this value has been the lower, the current value in the market. So it's not the price is 99, it is the price percentile which is 99. So it is talking in terms of percentage. It means that the Adani port price, which is currently prevailing, is at the highest point, or the 99% time, the last 180 days, the price have been below the current price. Similarly, if your OI percentile is 99.44, it says that 99% time, the OI has always been below the current OI. So if I click here, look at future OI edge, I see the graph. This is the picture. One straight move, and the straight move is led by more of greens. This particular, this shift itself should be a good trigger for us to know that what has made this a huge amount of OI which is taking place. Now, one thing I forgot to tell across the last 1.5 hours, we do have a back button now. Okay. So you can go back to your previous product, which you have seen. So if you are like moving between two products, okay, you can now use the back button to see between the two products. We saw Adani Pro. Let's see Bank of Baroda. You can see the table view. You can go to the graph, see the Bank of Baroda. So consistently we see the price, you see the OI behavior, minus shorts, the shorts which were getted, it was completely covered now. Now this level becomes crucial. What is the next thing? Will it be green? The start of the green can give a completely different picture to it. So if I use this open width, there are certain products where you will see the open width is on the header. There are certain products where you have a lot of symbols at one thing. You will see on the symbol click, this opening up. So you see open interest. This is Bank of Baroda. When I see this, I recollect the State Bank of India only. So like if you were saying that earlier, the 300 level was a crucial. The moment the 300 was removed, it went to 320, 340, and those on. So it was just moving higher and higher. Now, I won't say this OI as a writer OI. Because the price is going higher, it has almost achieved the highest strike which is available for trading. So highest strike which is currently available for trading is 98. The exchange is not opened up the rest of the strikes. So this is more of a buying. And how you see that the buying is taking place in the call and selling is there in the put. A synthetic future takes place here. So today we saw 90 call. There was an unwinding of 59 lakh shares in the thing, which was a highest call up till yesterday. So this graph, if I have to look, this graph, the length of the graph will tell you the entire summary for the 2 days, how it has been since yesterday. So yesterday the bar size was, so yesterday if you look at, it was nearly more than 1 CR. If you look here below, So you see that this is 1 CR or something. And today, more than 60% OI got shredded up. So when this happens at the start itself, at morning 10 o'clock, you can start getting the hit. Like multiple strikes, you are seeing the unwinding, it's shifting higher. That itself gives you the lot of good vibes. So if I were to look at, say, Hind Unilever. Okay. So now you have Hindustan Unilever. The price is below its highest put strike of, say, we have the highest put strike here, 2200. Now, this is a very weird thing where the put strike is higher than currently where the price is prevailing. So that means these put riders are still having some faith. There has been minor unwinding which has taken place today. Now, we need to see, will this continue? Because having something at a higher point makes sense only unless until I don't have a conviction, I will not hold on to my writing position which is in a loss. Correct? So if I have a conviction that the prices will rebound, then only I will hold on to it. So currently we did see today some sort of nervousness was there. So ideally, if it breaches this, the next support point comes up to be 2100. But still, I will not go short in this stock at present level because the highest put people have really not given up. There could be a minor, shake off which has taken place, but there is lot of, strength still there. So I will avoid any short. And if it reaches this 2200 level, then I will go long. So as of now, it's a no trade zone. Okay. So data is not giving, the confusion is there. So if it goes beyond 2200, then it's a long trade. Otherwise, it's not. So someone asked me on Twitter. So I thought let's cover this talk. And many times it's not necessary the way we think it will behave that way. Many times there would be a data which would be confusing. So it's not necessary you have to compulsorily trade. You have to let it go. There are so many stocks and good, we are seeing a lot of new entrants coming up. A point was there, maybe, or I remember around 8-9 years back, it was a point where we used to have 240 to 50 stocks in derivatives. That time options were not liquid. Today we have options which are liquid, but the number of stocks are less. So hopefully we will have good amount of, our bandwidth will increase. The lot of stocks would be coming up. So there are many stocks which can give you the good ideas. You don't need to be compulsive trader. So now, say for instance, IBOL housing, you have multiple calls thing. So one, it's removed unless we don't see this all three coming out. You have multiple hurdles which are taking place. So you need to look the data points. Once we see a clear path, you go all in. So this is how I prefer to look at the market. One product, so built up cycle. So this is something which is very interesting, which helps you to actually scan the market and pick up the stocks very fast. So if I have to look at the color, so Maharaja Battery, Ashok Leyland, they have seen last a week's time more of reds compared to green. Then Bata India has been there. So if you look, finance stocks are seeing now unwinding. Britannia, so the FMCG were completely on the short side. You know that what not to do. So I will not go long into Britannia unless until the data changes and we see that there's some conviction coming up. HDFC Bank, we are seeing the shorts. Lever, consistently the shorts were there. So there's a confusion. Built up, the cycle is still a lot of short. Option wise, it is not giving that conviction. So if there is a contradiction, avoid it. Metals, Jindal Steel, there is a long and long unwinding. So there is a good data which is spanning out. Then you have, say, L&T, unwinding. So there's no much nervousness. It's more unwinding part which is taking place. In the auto, the Maruti is not supporting, which is shown by the data also. So here you can actually scan it color wise. You can see how the things are moving out, where you are seeing series of green, where you are seeing series of red, and you can take your course of action that way. Okay. So this is how actually I believe that you don't have to stick to one product. You have to be looking across the product to come out with your sense of it. Do your homework. I'm sure you will be able to figure out the 5-6 stocks which you need to keep a watch the next day. And the moment the market starts, look at the data before taking a trade. That's what my advice would be to all. So I open the floor for Q&A. We'll take few question and answers. Okay. So there was like, I guess most of the questions we have already covered up. So when we enter in a trade, when breakout done, how we confirm that the breakout is not fake? So breakout is not fake. You need to look at the futures data. If it is a long and you see that the options data, you see there is a upward shift, and you see some sort of in the money put writing, call unwinding across the strikes taking place, you can confirm that the breakout is not fake. If you see multiple hurdles and the stock is just able to remove the first hurdle, you see how much is the gap between the two levels. If it suffices your gain, if you're see, I won't be able to understand like, are you looking for 5-6% move or are you looking for 2-3% move? If you're an intraday trader, even 3-4% move is good enough for us to make a money in options. If you're a positional trader, you need a decent 8-9% move so you make a good money in the option. So it's completely relative how you look out for. Okay, so the question is, can you repeat the price percentile one? Yeah, I can show. I go to price. Okay. So in a price percentile, basically you can look at the look back period. So we have kept, after our analysis, we have kept that 180 days is a good decent number to look back. You can sort by symbol, price percentile and OI percentile. So say for instance, I figure out by price percentile. I look at the stocks which are where the price percentile is high and the OI percentile is also high, because that gives a conviction that the traders are going, the price is increasing with increasing OI. When the price is increasing but the OI is not increasing, so that's not something very lucrative scenario. So say for instance, if a BL is there, so we see there is a breakout. Okay, the price is going up now. OI is now gradually increasing. So though it is not at the highest point, but it has started picking up the momentum. So could be one of the stocks to be considered. Against that, if I have to look at Adani Enterprises, so the entire move of this has led by the unwinding in OI. Okay, so now we do see today there was OI increase, but unless until you don't see a sustainable increase, we don't get that conviction. So there has to be a sustainable. So the one which we saw here, you saw the OI increasing. There was an OI increase, and then it was more a continuous move. So unless you don't see there is a good OI which is there, coupled with the price move, we should avoid it. Now, similarly is on the short side. So if I say the price is at the lowest point and OI is at the highest point. So if I have to consider Britannia, this is how it looks. Okay. So the price has broken the crucial support level The OI is increasingly on the short side. So this is basically a short indication. Okay. How do we use the Greeks for intraday? Greeks itself is a very vast thing, but there are many ways. Same way like how you look at the breakout in the price or option day or open interest, same way you look out for the Greeks. So I put an indicator delta. Then I say I put theta. Now I say going for say bank nifty 25 Feb 21 36,000. See. Now this is bank nifty for the next month. Now you saw how the price has broken. Okay, the price has come down. The option OI has increased. That means the short was there. Now, if you look here, the delta chart. So you saw over this period around 11:25, there was a delta which also was giving a breakdown. So that means earlier, which was the option in the money, now it is shifting its regime and moving towards at the money or out of the money. So this way we can play out. So same way where you see there is a breakdown, the delta coming down. So at times you might see the Greeks will give you the signal before the option OI starts unwinding. Okay, because everything then boils or everything gets connected. Sooner or later things will fall in place. But Greeks can at times give you the signal before the actual market starts reacting to it. Okay. If I want to put some other indicator, so this is the theta. So if you look at the theta is also now increasing because as we come closer to the expiry, so it's a monthly expiry. At the start, we not see much of the theta, but now you see the theta is coming down. And as the option becomes more at the money, you also know that the theta, the option becomes very, very sensitive. Your time decay is, at the money is quite sensitive to the volatility, gamma, everything. You start seeing that. So you can actually do your analysis using the Greeks and figure out like where is the breakdown or the breakout coming place. So any other questions? So I think so we can now end the sessions. So thank you very much for your valuable time and do post to us if you have any query. Okay. So one question was EQ level should be tracked daily or on expiry. So EQ level, you can just keep a back of your mind looking at that data. So it won't change every day very drastically, especially on the expiry day, it would be there. But you can just keep a hang of it, not compulsory. But when you are when you see that market is at a very risky position, then definitely you need to have this data. Short cycle means next day. If 2-3 days short cycle means next day short will continue. If you have to look at if the short is there, you have to see the quantum of OI change. So next, if you see that the quantum of OI change is considerable, then you can definitely take a short trade. If you see that the quantum of OI is very less, then you should wait for the option OI data to give the signal. Any breakdown, any put unwinding, any crucial levels removing, then we can have a good team. Otherwise, there could be like the data can reverse. So you see that 2-3 days short is there. Look at the actually how the options have moved. OI has been. Look at the OIH data, see the quantum, and then they take a decision. when can we take the position using trap indicator? So basically 3:15. So just before the closing, you can take the clue from the trap indicator. I also breakdown not fake. We already have discussed based on the futures and option data. Thanks, friends. So it was wonderful having this webinar. So do let us know in case of any query. You can also book a demo. You can understand the application in detail from the entire support team of Quantsapp, and do your proper data analysis. That's what I would rather say. So do your homework. So every day, spend some time, understand, scan your market and see how it is, and to pick up your trade for the next day. So data, it's very, very important, and you can definitely filter out the high conviction trade using this. Thank you very much. Bye-bye.